Hi guys, Harry Otis here, professional trader for 20 years. Started my career in 2005 and still alive in 2026. Okay, today, chart of the S&P 500. This is Monday, May 18th, smack down in the middle of May, and one day after Friday's OpX, which was very, very scary to say the least. Okay, and the big news today, of course, there's a tech sell-off. We also had some war news, but we always have war news. But the really big news, and I'd like to get into, is a tech sell-off. Okay, the leaders of the space are sort of looking. Well, they gave up a bit of their gains. I want to talk about that later on and what the implications are and how I see it going forward. We'll also recap some successful trades that we had going on, and also, if we have time, a sector that I'm looking at that is setting up for a good long trade. Okay, so first, guys, we always talk about the technical picture. It's still bullish. Nothing happened. Okay, Friday, because today's Monday. So Friday, the 15th, we had a big OpX, a big down day of 1.6%. It was the first big down day of this entire massive 1.5 month, like 18% plus move with no pullback on the SPY. Okay, so Friday, we had the biggest pullback, 1.6%. Okay, but what really scared everybody was the fact that rates were going up and inflation was going up. Rates were going up because inflation was going up in the war. And today, really, to tell you guys the truth, I was expecting a down move, a bigger down move, so we can get more extended on the downside before going up. But if you see, technical picture is bullish, and there was a big wick, which means this is very, very bullish for the S&P 500. Okay, so let's always pair it with the sentiment analysis. Greed, still there. We never went to neutral. Okay, some things are extreme greed, like the momentum, but here we talked about the breadth is at fear. And if the market drops any more, we can get this breadth into extreme fear. And I was hoping it would cover this gap here on SPY at the 723, technically speaking. Who knows? It might going forward. I mean, this is just one day, Monday. We could get some bad news tomorrow on Tuesday. We don't know. But it would be nice to get things like the breadth into extreme fear while we're still at highs. Okay, it's very, very good, because then you can start going long. Okay, there's not a good setup to go long now, although not in some cases there is. I'm talking about generally speaking, the general market. Okay, I wouldn't take trades long on the SPY right now. Okay, but there are sectors that she should be going long, I think, that are setting up, and we'll talk about that later. But sentiment is still there. It's still positive. We never went to extreme territories. And as I mentioned before, a lot of the oscillators here were like at neutral or, even oversold a bit. Okay. And we also have the put call ratio is at extreme greed. But I'm telling you, this is a 5-day moving average. On Friday, as options expired on Friday the 15th, a lot of those options got expired. Worthless, probably. And now the put call ratio today is probably like sitting at neutral levels. It's not extreme greed. Okay, so you have plenty. The bullish signs are that this market is very, very strong. The bullish signs are there. Okay, so let's get to the big news, the tech sell-off. Okay, basically the tech sell-off is the semiconductor sell-off, and it's sold off today. I'm looking at the chart of the SMH, which is the semiconductor index, and it's down today about 1.8%. Okay, it's a bearish engulfing, so I hope it goes down. Remember, we have a bullish option spread in the SMH, okay, but it was done at a credit. Okay, so even if the market continues to go up, the SMH continues to go up, we will realize a profit on that trade. But the best outcome would be for it to go between to drop 475, 435-ish level around here. Okay, because there we will make our most profits. Okay, and if it drops all the way back down to here, the 400-ish level, we cover this gap. Okay, and I will be going long at this level. Okay, of course I can make another trade on it, but so far hoping this is my outlook going forward, is that the semis get taken down, but the market does not. Okay, so the market, in other words, the market's breadth increases because we are at fear on the breadth, and we get to breadth, and we get to extreme fear. And all the oscillators, okay, anyone you want to use, any market breadth oscillator you want to use, the McClellan oscillators, the advanced decline line, whatever, the breadth is very, very fearful at this point, very low. So another drop would be good for the market as a whole. This is the SPY, but SMH might not be the leader going forward. Who knows? Okay, I'm hoping it still goes down. I don't know. But so far, the SMH looks weaker now than the overall market. The overall market looks very, very strong. Okay. And our trade Intel, we have a put here at 90.88 level. Hopefully it goes back down there. So we can like sort of break even on it because this is a losing trade. We have about 850, around 830 or $8.40 in credits stored up. So, and we sold the 90 put. So if we get it at 98 by the end of the month, it'll be a break-even trade. Okay, so we're close. Okay, so that's why I think there's a lot of air that might have to come out of the semiconductors. Okay, so this is why SMH, I am still bearish because it looks worse than the market. Unless it gets lower, then I'll start turning bullish. Okay, but this to me is not enough of a drop for me to start buying more or buying. Okay, because I'm generally short the semiconductors at this point. Okay, so that's tech. Okay, basically it's semiconductors. So let's go revisit some of the trades we had before, especially the SaaS, software as a service sector. We had Match Now. Remember, guys, this trade is looking very good. We entered it because it was a it's bearish, but it's so oversold. We had positive divergence in a lot of the indicators, and now they're getting back up to the highs. So this trade is looking good. We shorted on ServiceNow. We shorted the 85.80 structure for puts for about $1.70, if I recall. We're already like 50% profitable in this trade. We're probably going to get out of it soon. Okay, so this is a very, very conservative trade, by the way. Okay, this is a very, very conservative trade. You could play it. Guys, when I give you these trades on the options, I'm just giving you like one example. There are many ways to play it. Okay, what the general view that you should have is when I enter these trades is that I am bullish. So you could enter any type of bullish options trade. It will probably have the same chance of succeeding as any other one. Okay, but this is a very, very conservative one. You could have done it in many, many ways. Okay, ServiceNow was like that. Same with Shopify. We just entered a naked put. We bought the 90 put. It was around here, and now it's at 102 because the 90 put coincides with this very, very good technical support level after a big 50% drop almost from like 180 to like 100, almost like 40 to 50% drop. So I think it's a very, coupled with the fact that we had positive divergences in CRM. Okay, the price is going down while the RSI is going up. See, even CRM is up today, and the same thing with Now. Okay, so we just took it into the Shopify space because that's another SaaS type play, and looking good so far. The premium is being destroyed. We just sold the put for next month's expiry. Okay, so our SaaS trades are doing well. We're still holding on. I want to milk them out for a little bit more. Milk that trade. So service as a sector stocks doing well now, and our Shopify trade. Okay, so this is the sector I would like to end. I don't want to end here, but I like to end with one sector that I think is setting up for a nice long. Okay, and that is the defense stocks. During this war, the defense stocks have been destroyed. Okay, I'm looking at, you can see all of them. There's a lot of them. I'm looking at Lockheed Martin Corporation. Okay, why do I like it? Okay, look at it overall. It was up to 680 and it got cut down to like 518. This is a big move. Okay, but as you can see, it's at a big, big support level here. I like these very, very big support levels coming in from very, very oversold. Okay, you can enter it now for a longer term short. Okay, but I would like for it to drop even lower maybe. I will decide, but if it drops even lower, it looks like it's setting up for positive divergence. But it doesn't have to because you already have the MACD crossover here as it was flattening out. Okay, so to me, you have Lockheed Martin, you have Northrop Grumman Corporation, same thing, right at support after a big drop from 770 to 550 on Northrop Grumman. So look at this huge support level right there. You want to buy it. Okay, this is the perfect spot. And look, oversold a lot. Yes, it can go oversold. Doesn't really mean anything. But to me, I think the sector is it almost looks like the service as a software as a service companies. This looks a similar, very, very similar setup. Okay, so what do I like? Let's go to the options chain here. Northrop NOC. I'm looking at, you can look at the June 18th, but you can go as far as the July option structure, 60 days, but I like 30 days if you're going to do I'm going to show you guys the simple trade here. Again, it's the 520. I want to sell the 520 put expiring in June 18th, 31 days, and I want to buy the 510 put. Okay, so this is a simple call spread. Again, guys, you don't have to do this trade. I'm just giving you the simplest option that has a great expected value, that's positive and should come in and takes the least amount of risk, in my view. You don't have to. There's a lot. You can do many trades. Like you can sell a put and then buy a call spread if you're more bullish. But again, I'm just pointing out that right now you should be looking to do bullish trades on these stocks. Okay, and this trade right here, that's selling the 520 put and buying the 510, you should get it for at least $3. Okay, the spreads are wide now because it's aftermarket, but if you can get it for $3, don't get it for less. Don't get it for 2 or less. Okay, and you'll see the same thing for LMT. Okay, Lockheed Martin. Get a decent spread. You want at least 1/3 the width of your spread. This is a $10 spread. I want it for $3, maybe $2.75. You can pull it off, but I want $3. Okay, so that's how you should look at it. Risk reward. You need $3 to make it worthwhile. Okay, so that's one way to play this rebound I think is coming in the defense industry stocks. Okay, so that's it, guys. Let's reiterate. SPY. There's a tech sell-off. However, the SPY is looking better than the actual SMH, which basically the tech sell-off is like semiconductors mostly. Okay, so be careful. I still negative on this space. It's oversold negative. I'm positive, but I don't think short-term it's going to be this big. I want to pull back and a better setup to go long. I am looking to go long the semiconductors. Okay, just not right now. Right now, I think they're going to be taken down. And I think as they get taken down, the SPY survives more than they do. Okay, because it's looking very wicky here. This is a very good move. Okay, really, I was expecting this market to tank even more, like a gap down open today on Monday. It didn't. It's showing very strong resilience. Okay, and I'm very mad at it. I want to go long. I wanted to cover this gap. Something. Let's attack Iran or something. I don't know. I'm just playing. But it just goes to show you how strong the SPY is. Okay, and I'm looking for some kind of pullback. I might not happen. So, okay, whatever. We'll play what we have. We had our SaaS companies coming in. Look, ServiceNow now as we entered it around here, it's 2-3 days. It's really in the money. Our put spread is printing. We had a Shopify trade here that's looking good. We shorted the 90 put. Okay, I'm willing to take a possession if it ever goes below that. So we did it at a technical level, so that's good. And it is bouncing. I don't expect these to go higher. Right? Like there's still, I'm just expecting a bounce between the 115 to 130-ish level, 129 at the highs. If we have a super huge market move, this might go to 135. Okay, so it's still a negative. This is just a short-term trade. It's still a negative downturn. Okay, I don't think they're gonna really rebound that much. Okay, but as a trade, I like it. Okay, and of course, Lockheed Martin et al., the defense companies that is, approaching support, almost a carbon copy of the SaaS companies, approaching support, bouncing off of it. Very good for a long play. I just showed you guys. I didn't show you Lockheed Martin. I'll show you Northrop Grumman, and you want to do the 520, 510. Was it 520 or 525? Okay, it's the 520. It's the 30 delta. In case you guys want to know, if the price moves, you want to short the 30 delta and buy the corresponding 10 wide spread. Okay, so you're shorting the 30. You're buying back the 24 delta, but it might not be that. As the days go by, these deltas change. They're very dynamic. They're not static. So what you want to do is you want to start by selling the 30 delta put first, and then cover $10 lower. Okay, so that's it, guys. Let's see what happens this week. It's looking like the war might be over. We've said this before. I don't know. Let the negotiations begin. Later.